Well, good afternoon, Advanced Trading audience. We're eager to talk this afternoon about the June WASDE report that came out at 11 a.m. today. I'm Curt Strubhar, Senior Broker here at Advanced Trading, and joined today by Dr. Cesar Cruz, our Director of Research, and Nate Durako, a familiar face, Senior Broker here as well. So this morning's WASDE came out, eagerly anticipated. It didn't give us a lot of major changes, but we're still going to find a few things to talk about today. Both corn and wheat saw a 50 million bushel increase in current marketing year export forecasts. Nate, do you think those changes were anticipated by the market, or were there any surprises in the domestic numbers today?
Yeah, I think corn specifically, and wheat, given the pace of sales, corn I think we're around 97% of the USDA's forecast already sold, committed, about 150 more million bushel unshipped book versus last year, still 650 plus or minus still to ship. But I think the expectation is we've seen some of these gradual increases from the USDA was going to get to that number. No big reason, I think, to suggest that we see major cancellations. Get a little ahead of myself here. We didn't see any changes in the current forecast for South American corn production, something the market's watching closely with some private estimates that continue to ramp higher. And, maybe that gets a little bit more into our export share as we get later into the summer months here. But it feels like today, given the pace of sales, the uptick was justified for sure. So not a big surprise there. I think taking a little deeper dive into the current balance sheet, there's still some expectations once we see the June 1 stocks that we find some supply back in the feed residual. Didn't expect to see that today. So, a tight carryout, a reduction in 8.9% stocks to use, so 1,365 is relatively tight going into a new crop.
Yeah, absolutely. A lot of things to watch still over the next couple of months. Cesar, Nate mentioned the lack of change in Brazilian output. In addition to the USDA today, we also had the Brazilian agency, CONAB, out with their figures. Can you give us some highlights from their report and talk maybe a little bit about the divergence between CONAB and USDA on Brazilian crop sizes?
Sure, yeah. So CONAB this morning came up with their June report, and they increased both corn and beans production in Brazil. There wasn't a lot of change for corn. For beans, they also decreased their crush. Brazil, they actually also have a mandate for biodiesel blend in diesel production in Brazil, which kept constant at 14% this year. They were expected to increase by 1 point in 2025. So that was the reason CONAB decreased their crush estimate, and they increased Brazil exports by nearly 1 million metric tons. So on the corn side, again, they are increased. Corn, they're still below what I think is reasonable. They're still below the USDA. 128 something, USDA 130. USDA increased by 4 million metric tons Brazil corn crop estimate in May. So they kept unchanged their estimate this month. For beans, there was no change here also from the USDA perspective. Brazil is expecting to produce a record bean crop. And the estimates for corn crop now in Brazil, as Nate mentioned, they're becoming larger and larger. We've been seeing estimates over 10 million metric tons larger than the USDA is saying now. Right now, the CONAB and USDA the divergence is 1.7 million metric tons. Not as bad as last year, but what is catching my eye is actually how much they are diverging their export estimate. It actually happened in 23-24. CONAB started low, USDA very high, and USDA cut their estimate for 23-24 by a lot. Now CONAB is starting at 34 million metric tons, USDA is at 43. I think there is very strong domestic consumption in Brazil that it's going to probably restrict how much they're going to export this year.
Yes, excellent. Maybe a bit of a bright spot for the U.S. farmer when we get all of the headlines about the crop size increasing, but their increasing demand as well, bodes a little better, as you alluded to there.
Yeah, it's both for feed consumption and ethanol production in Brazil.
Absolutely. Well, let's stick on the biofuels, the ethanol side of things. Shift back to you, Nate. There was some chatter today in the marketplace that we may finally get the long-awaited 45Z guidance for the biofuels industry. Now, we have felt like we've been on the verge of that several times over the last few months, and it hasn't delivered. So that's not a promise that we're going to get those results tomorrow. But Can you give us a little color on why that's so important to the biofuels industry?
Sure. A lot of moving parts in that, but I heard you say on some calls today the long-awaited tomorrow release that we've seen multiple times. But I think it's a timely discussion. One, we saw some adjustments to the 45Z pass the House. So now, depending on what we potentially see from the Senate for final bill, and ultimately the margin environment that we're seeing, first part of 2025 here, lower biofuel production, maybe a little struggle to find some demand for soybean oil. So in general, I think the industry is just trying to get clarity on what the specific margin environment looks like going forward. We've built out a lot of the industry. Relying on 45Z to drive potential tax credits on variable or different feedstocks, what that flow looks like, whether that's imports are allowed or it's Mexico, U.S., Canada specific, and really just looking for an uptick in the margin for the biofuels producer, for the soybean crusher, for the ethanol producer, dependent on that 45Z. And along with that, the RVO. Part of tomorrow's potential announcement is clarity on what those obligations are going to look like. And industry's kind of at a standstill right now without that. And we've seen a slower pace of production here for the first part of 2025. And, given some of the growth in the world stocks, everything else that's going on, it's a key part for the domestic industry, for the biofuel producer, for the farmer, to drive what we hope is a positive margin environment going into the new crop marketing year.
Right, absolutely. So let's stick on that topic for a second and pull back maybe to talk a little more on the soybean processing cash market. You noted we've struggled to find some soybean oil demand, and today's WASDE actually reduced the current marketing year soybean oil used for biofuel to below year-ago levels, so that the growth that we've been seeking, at least in this marketing year, hasn't been realized. And yesterday we saw some major moves in the soybean cash markets, perhaps reflective of some of that margin tightening that we've seen. Do you feel like a lot of cash soybeans were moving, or is that industry trying to make a statement about margins? And there's a lot to unpack there, and just a quick reaction.
Yeah, we've heard for a while now that the cash crush margin on the soybean processor has been a struggle. We've got a huge supply of meal available, so that's been weighing on the market a little bit. Ability to move that has been an issue as well, just from do you continue to crush at the same capacity, the same rate, without the ability to move some of that product. And oil's kind of, I frame it up as kind of been the hope still. As we get some potential clarity on biofuel policy, seems like the processing industry is trying to find homes for meal, maybe a little bit more optimistic on what the oil value or oil return could be. And I'm not sure it's a big shift here for the remainder of the marketing year just because of the capacity and crush rate we've seen. The notable basis changes yesterday, I'll call them a shock. I mean, a major company with a good footprint basically tied it to a struggling margin environment and said there's not a lot of reason for us to continue to run at this rate. So they took a stance and said we're going to drop our bean basis. The cash movement question, I do think there was some beans moving. We were trading some pretty strong premiums. There was still an cash inverse from old to new crop. Still justified warehouses to try to establish or continue to short their soybean DP inventory. And now that's changed a little bit. The cash market fading, there's still a small inverse from from July to new crop nove, but it's much less of an incentive to go ahead and say I've got to keep hitting that accelerator and selling beans. It's hard to quantify the movement. I think there was probably some movement and some comfort from soybean processors that got a decent amount into the month of July. I think August is kind of an unknown, and maybe some clarity tomorrow on policy gives a little bit different direction. But I do think what moved yesterday and didn't continue to sell into the break, if that makes sense. And now there's just kind of let the dust settle. Production unknowns, although maybe optimistic of still a potential trend yield with no real weather concerns right now for June. It's still only June. So a lot can change in the next couple of months as far as new crop production outlook and policy changes that might drive a different picture for that for that processing footprint.
You bet. Excellent. Cesar, so the WASDE today, we've talked a little bit about the domestic balance sheet. Globally, we saw a few minor changes. We saw a bit of an increase in the global ending stocks of soybeans and a decrease in the ending stocks of corn or wheat. Did anything jump out to you in the global numbers?
It was a very boring report, right? We still need to figure out things that we can think about going forward. For the wheat market, we saw a little bit of increase in EU production. India expect to have a record crop in wheat, but trade and consumption is going to decrease actually ending stocks for wheat. For beans, I think for beans and corn, the big unknown, also in addition to all the policy problems that we are having here, is also the trade situation, right, Curt? Like, we don't know what to expect with the agreement between China and USDA and Trump now. Right. And especially for beans, we've been seeing like exports have been struggling week after week. This morning we didn't have good export sales for beans either. And given that South American has been a record crop for beans, there's a big competitor out there. For corn, as I mentioned before, I don't think maybe Brazil won't export as much as we think, but for beans, there is a lot of beans coming there. Sure. Argentina also has a big, this year is going to be important for Argentina because they have a reduction for their retenciones, which is the export tariff. Mm-hmm. That's going to end by the end of June. So we're going to have to keep eyes open on what's going to happen in Argentina with their exports in the month of June.
Sure. Good stuff. Mm-hmm. Nate, let's talk about the old crop corn supplies a little, and you mentioned this a moment ago in your comments, and when we were sitting out at our desks during the trading day, you commented immediately that the revised old crop corn carryout number was getting pretty tight, 1.365 billion bushels, and we've got about 90 days yet before we really get to Corn Belt new crop harvest. What's the job of the cash market in those 90 days?
Well, I think at face value, when we talk about the pace of exports, seeing the increase today, we can identify that the export market still needs corn. The center Gulf, the delivery market, the pieces to that puzzle are we going to see, one, enough incentive for commercials to keep shipping, basis value, spread, is there enough of a cash inverse? Two, what's the producer going to do? Is there 15% of the old crop stocks out there, we'll get a number here at the end of the month, what that looks like. Is the producer going to look at the current forecast and say, I've got a good crop growing and continue to move old crop, or do they say there's a little bit more opportunity on upside, some weather markets, et cetera, and remain a tighter holder of that? Ultimately, we've got to cover the river. We got to see convergence. A 1-3 carryout, depending on what we see with feed residual adjustments, I think it's still a pretty tight number to get to new crop, right? Mm-hmm. So there's some rationing of demand, not the same extent that we've seen in previous years, but we're still seeing a strong basis environment across space, whether that's the export market being within a couple cents of delivery value, still needing to buy corn, the Eastern market that's been a strong avenue, strong demand pull all year continues to hold, and now we're seeing some of the Western values come back up. The unknowns on that Brazil harvest, maybe timing of when they start to see a bigger shift into their export flow, driving a little bit of that Western basis unknown. But right now, positive basis values, still an inverted July set market. Commercials should continue to be selling into that. And ultimately, when the producer moves, have to be quick to react to that buy basis. Producers, I think, should be looking at opportunities to sell into these strong basis environments. Maybe that's an avenue of a basis contract, or potentially still looking at maybe re-owning that via a call with some pretty low option volatility, pretty cheap re-ownership, just to kind of see what the weather markets and how our new crop outlook develops. But, it remains tight. So the market, I think, overall is going to continue to have to incentivize that movement, whether it's flat price to the producer or spread and basis environment to the commercials to keep moving grain.
To the warehouse.
Yeah, I don't think we're slowing that down by any means here. That need hasn't shifted.
Yeah, good stuff. Thank you. Well, the last question, Cesar, one for you. And it's more of just a fun one. You recently visited with a group of farmers and agronomists from Brazil in our office. We've got a picture of that group that we can share on the broadcast here. But
tour bus showed up with a bunch of Brazilian producers.
That's right.
Yeah.
Can you give us a little guidance on what kind of opportunities that group was looking to learn and glean from your knowledge?
Yeah, that's interesting that people were asking for what are these guys doing here. They should be harvesting, right?
Right.
But they are from South Brazil, so they plant first corn crop. They're done harvest. And so they came here as part of a tour that was supported by the Cooper Alpha in South Brazil. And they were looking, they want to know how big this crop is going to be. And they always come here to compare what we do here in the U.S. to what they do there in Brazil. They come for a very good crop region in Brazil. They have good yields. They are good producers also. But they are always interested in learning about our comparing costs, how much we're going to export here, how much competition they're going to have with U.S. corn and beans exports, right? And they are also livestock producers. They are part of a co-op that produces hogs, poultry. So they're also interested in learning more about livestock production in the U.S.
That process and marketing. Interesting.
It's going to be just the first one. We're going to receive at least 3 more groups in the summer.
Great.
They come for the Farm Progress Show usually, so we're going to have more producers visiting with us here.
Yeah, absolutely.
So are they in the ethanol-centric area of expansion, or are
they are down? They are actually closer to where we had the outbreak for the bird flu in Brazil. They're from Santa Catarina state. So we have Rio Grande do Sul, the southernmost state in Brazil. Straight north is Santa Catarina, between Rio Grande do Sul and Paraná state. Somewhere from Paraná, actually.
Somewhere right there in the heart of the good growing region.
Yeah, and the ethanol expansion in Brazil is occurring more in the central part of Brazil, Mato Grosso, Goiás. That's where most of the big plants are.
Yes, absolutely.
So how are they viewing this domestic demand growth? Maybe not necessarily as their bushels aren't as tributary to that ethanol production, but just how the flow of grain changes. Is it, in a simple way, in my mind, I just think that they're probably looking at more value in corn ownership, right? Throughout the marketing year. I kind of associated to our P&W bean shipper. In previous years, it's kind of once that export picture's gone off the P&W, those beans are trying to find a home. And we've built now a significant amount of domestic demand west of the Mississippi River. And in conversations with producers over the last couple of years, they're very aware that there's more stable demand throughout the entire marketing year for their product. And I don't know if that means I'm building more storage, or I'm less willing to sell a cheap basis value in the fall. Are those conversations going on in Brazil? Are they thinking, I got to look at more storage? They've always been space deficit.
Okay, yeah, that's right. Yeah, that's a good question. So there are different dynamics for South Brazil and Central-West Brazil. There's people who came here, they trade more with their co-ops.
Okay.
All right. In Central Brazil, Mato Grosso, Goiás state, those producers, they have more their own storage on farm. But answering your question is probably going to be, I've been talking to people that are buying more and more silo bags in Brazil. I've heard this morning people saying that they're already storing corn and beans in open air in Mato Grosso, and the crop is just like 2% harvest as of Sunday. So it gives you an idea of how hot this market is there. But they're going to buy probably a record amount of silo bags this year to hold on their crops for beans and corn, both in Mato Grosso and Goiás state.
Sure. Yes, big output continues to grow every year.
Yes, yes.
It's interesting. They come here to learn what they can about our crop size. Our producer wants to know what he or she can about their crop size.
Producers are producers, right?
Absolutely.
Yeah, and the amazing thing is that they love each other. They reported, like, they came here, we're talking to producers, and they said some get very emotional about something that one of them said. They actually start crying. So it tells you how much close they are. They are competitors, of course, but they are also producers. So they have a lot of similarities that make they love each other what they do.
Absolutely.
Yeah.
Certainly still a lot of empathy between the two parties.
Right.
So, well, thank you both for the time today. Very good interview. Thank you, audience, for tuning in. Our next broadcast with this group will be Monday, June the 30th at market close, which is the day of the June 1 stocks and acreage report. So it'll be a little different than our monthly WASDE, but we'll tune in for that quarterly. So final wishes, happy Father's Day to all the fathers out there in the audience, and thank you. We'll see you next time.